AI requires a lot of compute power, and the cost for your AI workloads can spiral. That is, unless you're running on OCI, Oracle Cloud Infrastructure. This was the cloud built for AI, a blazing fast, enterprise-grade platform for your infrastructure, database apps, and all of your AI workloads.
Right now, Oracle can cut your current cloud bill in half if you move to OCI. Minimum financial commitment and other terms apply. Offer ends March 31st. See if you qualify at oracle.com/WSJTech. Oracle.com/WSJTech.
Good afternoon. Getting right down to business here. We're doing it live here at 4 o'clock, doing more at 4 on 790 KABC, streaming live online worldwide at KABC.com, and the on-demand Mottek On Money podcast, KABC.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Rattled nerves on Wall Street this week over trade war concerns after President Trump imposed tariffs on Mexico and Canada to get them to cooperate on U.S. border security and fight drug trafficking. Today, some calm return to the financial markets. Investors looking past the trade war with other countries. Tensions, though, continue to linger between President Trump and China. The financial markets took a hit yesterday when the president announced 25% U.S. tariffs each on Mexico and Canada and an additional 10% tariff on China. All three of the major stock market averages did close yesterday to the lowest we've seen in at least a week. The president's announcement also pushing long-term Treasury yields to the lowest closing levels of the year. With Mexico and Canada tariffs now delayed for a month, that was the other big announcement that's happened in the last 24 hours. It's nervous time in the car business with concerns that the tariffs imposed on Mexico and Canada will make new cars, even used cars and parts, unaffordable for consumers. I'll talk about that, and I'll talk about it with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Will be joining us live later this hour. China retaliating with 10 and 15% tariffs on certain products from the U.S. Will go into effect on Monday. Also, stocks ending higher today with the S&P 500 regaining pretty much what we lost in the previous session after that roller coaster ride yesterday in which we saw the Dow down in triple digits and actually popped into positive territory for a while. It was down more than 600 at the worst level and ended well off that bad level yesterday. Today, we saw a positive close, up 134 points here, followed the bouncing ball. We're at 44,556. The S&P 500 regaining 43 points today at 6,078. And the NASDAQ up 262, back to 19,654. The yield in the 10-year note is back to 4.51%. The price of gold kissing record highs, right now hovering at around $2,872 and change. Oil down slightly, down 4 cents at $72.66 a barrel. The volatility index easing a bit today, down 7.5%. Shares of Palantir Technologies soaring this afternoon after beating Wall Street analysts' expectations. Shares of Meta rising after this is the 12th straight winning session for Meta, the parent company of Facebook. In fact, 3 of the Mag 7 stocks now trading in record high territory. The S&P 500 is just about 1% away from its record close. The NASDAQ is just about 2.5% away from its all-time high. Alphabet stock heading for its 7th record close of the year today. Amazon stock looks like it's also at a record high at the close. We did get a new reading on jobs today. The so-called JOLTS report, the number of job openings in December, falling to 7.6 million. That's down from 8.2 million in November, close to a 4-year low. Gold, as I mentioned, at all-time highs today, got as high as $2,877.10 an ounce, and it looks like it's hovering right now at around $2,872 an ounce. Gold price is regaining an all-time high today, driven by investors looking for a safe haven asset after China retaliated with tariffs on the U.S. in response to President Trump's tariffs. Of course, we're following the gold story closely. Also, oil futures settling lower today, giving back most of their gain from the previous session to leave prices little changed on the year so far. The Trump administration still considering no taxes on tips. In fact, Peter Navarro, an economist and a top advisor to the president, said today that new revenue from tariffs will be used to eliminate taxes on tips. That's a big story, and I'll talk about that and the start of the tax filing season, what might be ahead under the second Trump administration on the tax front with Kimberley Washington, who's a CPA and tax analyst who will be joining us live from Bankrate later this hour. The White House also preparing an executive order to eliminate the Department of Education, according to sources talking to various news outlets today. We're watching that story too. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Gabriel Wisdom, Managing Director at American Money Management, based here in Southern California. Also author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for coming to the line here this afternoon.
Well, thank you, Frank. It's been quite a interesting start of the year. The so-called January effect is flashing green. This is an old market indicator that suggests as goes January, so goes the rest of the year. It's a sentiment indicator. And despite the strong stock prices, you cited the Magnificent Seven, there have been many others that are performing at or near record highs. Earnings are up sharply, but despite all that, sentiment remains soft. In fact, sentiment is terrible, as indicated by the long-term decline in interest rates. And at a time when tariffs probably mean higher inflation. You cited worries, in the auto patch about higher costs, certainly be higher costs among drug manufacturers. And the January effect all-stars were 5 stocks in the Dow Jones 30. These were 3M, a big manufacturing operation, a 17.9% gain in January for laggard 3M. Number 2 was IBM. That was up over 16%, and undoubtedly it has something to do with generative artificial intelligence and management looking to boost that kind of business. Goldman Sachs and JP Morgan were next, and then finally Amgen, which makes drugs that treat heart disease, cancer, osteoporosis, and whatever ails you. So things are looking up despite negative sentiment.
All right, the Magnificent One, as it was called up until recently, I guess, NVIDIA has taken a big hit. It's hard to believe it was just a week ago that we were talking about that DeepSeek news that China rolled out just about a little over a week ago, and that rattled the tech sector. But as we've noted here, most of the Mag 7 stocks are at or near all-time highs. NVIDIA, though, down to around 118 and change. Looks like it closed about $2 higher today to 118.65. What about the Magnificent One, if we can still call it that?
Well, NVIDIA, has been hurt by the DeepSeek surprise, and if imitation is the sincerest form of flattery, then NVIDIA gets it from DeepSeek, which did use 50,000 NVIDIA chips to create a cheap and very accessible open source artificial intelligence competitor, which will be beneficial for a number of companies, but perhaps not NVIDIA. It was growing like the COVID virus. Some were calling it COVIDia, but that has stopped. A big winner here in the DeepSeek situation is Meta Platforms, former Facebook. That's up 700% just in the last 2+ years. And the reason recently for strength in Meta, leaving NVIDIA in the dust really, is that it's a beneficiary from the DeepSeek AI update, and they're leading the charge in open source AI product development. In fact, Zuckerberg is telling reporters and analysts that the company's AI assistant will become the most widely used in the industry. Well, we'll see.
All right, crypto getting a new attention today. The first ever news conference for digital assets hosted by the U.S. government. The crypto czar David Sachs and the pro-crypto lawmakers got in front of the cameras and microphones today, committing to prioritizing Bitcoin and digital assets during the Trump administration. The Bitcoin has seen a wild ride this week. Got down to around 91,000 and change. It's just below 100,000 here now. What are your thoughts about what's happening in the crypto space and its future under the current Trump administration?
Well, it's looking promising. Ever since crypto was one of the president's executive orders signed in January, we've seen a lot of new, believers. The U.S. does have approximately 200,000 Bitcoin that it's been storing. These were Bitcoin seized in criminal cases, so maybe that's something that they'll be using. And with regards to the lawmakers' move to basically a stable coins bill, a regulatory framework that will bring some clarity to digital assets, I would say so long to the decentralized idea of under the radar trading of some kind of currency alternative. There's going to be transparency. That's what David Sachs is telling us.
All right, as you know, we talked to the biggest fans of crypto here, as well as the harshest critics. We'll be talking to one big fan tomorrow. It looks like we're going to have a big crypto guy on tomorrow, so stay tuned for that. But in the meantime, you've been pretty balanced with your views on crypto here. Have you warmed up to crypto?
Well, maybe I have a little bit, only because of the wider adoption. Remember, El Salvador became the first country to adopt the cryptocurrency as legal tender, and since then, and that was back in 2021, Frank. But since then, the International Monetary Fund has put a lot of pressure on El Salvador, and they've made some changes there. It's now voluntary for businesses in El Salvador to accept Bitcoin as a form of payment or legal tender of the country they do business with. It could be dollars. It could be, what are you, euros, Deutschmarks. That doesn't matter. But that's a big move forward. And then finally, I'd say that the cost to mine one Bitcoin is so high now that it does provide some sort of a floor underneath the current price. It's costing almost $50,000 to mine one Bitcoin.
All right, we talked about digital gold just now. But what about good old analog gold? Gold, hard to ignore, hitting all-time highs. What about gold here? What do you see ahead? A lot of people are talking about $3,000 an ounce for gold. We're above 2,800 here now. What about gold here?
Well, Frank, I've been pretty bullish on gold for the past year, and it has nothing to do with the crystal ball that I have. It doesn't work. It's just simply fundamentals. Sure, China's stockpiling gold to guard its economy against Western sanctions in the event of maybe a military invasion of Taiwan or more fallout from the tariffs or who knows what. But the fact remains that the West is running out of gold that it's willing to sell. And one of the biggest buyers is China, but the rest of the world is also interested in gold. They don't really make it very quickly. It has a higher market capitalization than Bitcoin, certainly, but it's used for jewelry. It's used in electronics. I still see maybe 3,500 to 4,000 an ounce within the next couple of years.
All right. What are your thoughts here? Just less than a month into the Trump administration, we get these rapid-fire policy announcements. Certainly, we've seen a spike in volatility recently, especially yesterday. Looks like it simmered down a bit today. But are you betting on more volatility here? And what should investors know about betting on volatility at this point?
Well, you want to hedge against volatility. In my view, that's really a big part of being a successful investor is mitigating the permanent loss of capital or permanent impairment. And so you do that through diversification. But if you take a closer examination of the, all these tariffs, our deal maker and chief has been hard at work. I don't know if he ever sleeps, but it's pretty clear that Trump's agenda is all about economic and national security. He's reportedly upset that Mexico, for example, has provided a gateway for China to get around the U.S. Sanctions. And so that was part of the reason for imposing a tariff and then withdrawing it on Mexico. But and then honestly, for the Trump administration to secure the U.S.'s energy future, we need to get the entire Western Hemisphere to function in a coherent means, as an energy bloc. And I think that's coming. These tariffs are a great bit of leverage that he's using.
Very interesting. Remember back in the day, I used to talk to Peter Navarro quite a bit. Many of these listeners here of this program remember that Peter Navarro was a UC Irvine business professor before he joined the Trump administration as one of the top trade advisors. And he spoke at a forum today indicating that the tariffs that are being imposed on Mexico and Canada that have been put on hold for the time being anyway, as well as the tariffs on China, will offset the possibility of removing taxes on tips. So that's something that he said today. What are your thoughts on this? You're an economist as well. Peter Navarro, also an economist who serves as the president's senior counselor now on trade and manufacturing. He says Trump's new tariffs will realign supply chains and create enough revenue to fund the president's tax policies. What are your thoughts on that idea?
Well, Peter's one of the smartest guys in any room. I used to debate him on the radio with you and with others, and I have great admiration for him. The president's first term was likely the last of the low inflation era that we've seen that ran from 1990 to 2020. We all benefited from an energy boom. There was new fracking technology. The inflation was low, and it was a wonderful time. And then inflation turned out to be the big villain of Joe Biden's 4-year presidency. And we all remember in 2022 when the inflation rate for used cars was astronomical. In 12 months, used cars went up 41%, and then came a surge in auto insurance premiums and so forth. So, a little bit of tariff protection and the revenue that could come from it might be a good thing, as Peter points out.
All right, the other big epic story here, of course, is the recovery here from the wildfires. Gabriel Wisdom, and what are your thoughts here on the sheer volume of materials that are going to be needed to rebuild the destroyed homes and businesses here, lumber and concrete, other raw materials. The damage is at all-time highs here, and what do you expect to see here as far as the impact, the economic impact of this rebuilding?
Frank, I think it's inflationary. Today, I believe it was State Farm, which is the largest home insurer in our state, is now asking for an emergency rate hike from state regulators. This is all the result of the Los Angeles wildfires. State Farm wants a 22% average hike in rates for homeowners and a 15% hike for renters and condominium owners. They're saying that the wildfire payouts you're going to be so large that they threaten the economic stability of insurers, and so rate hikes are coming. That means commodity prices go up, everything goes up. So, yeah, it's a terrible situation. Many of course, are pretty upset about this because what do we do? If you have a mortgage, you have to have insurance, and that's the conundrum.
Yep. At this point, Gabriel Wisdom, any specific places where you are putting money now and or taking it off the table?
Well, Frank, I'm still sticking with the worst to first for 2025. We saw what happened with IBM in the month of January. Same with Amgen. I mean, these are some of the real laggards from last year, the so-called dogs of the Dow. I like them. McDonald's is another favorite right here. And if we harken back to a difficult market, which would be 2022, when the market was very, very soft, there were losses across the board. The Dow's dogs from 2021 were actually up about 2%, including dividends, so they can be very defensive. That's what I'm looking at right now.
Gabriel Wisdom, co-founder and managing director at American Money Management, based right here in Southern California, also author of Wisdom on Value Investing. Gabriel, thank you very much for covering all the bases here once again this afternoon and for joining us live here on Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. An update following the washout yesterday. The Dow up 134 points to 44,556. The S&P 500 closing at 43 at 6,078. The NASDAQ closing higher by 262 at 19,654. Some of the Mag 7 names at or near record highs. NVIDIA, though, did rebound, but well off its high. It took a big hit over the past week on that DeepSeek news. NVIDIA stock today up just about $2 at $118.65. Estee Lauder among the casualties of the day, down more than $13 at $69 and change, a drop of 16%. Palantir, a big winner today, up more than $20 at $103 and change, a gain of 24%. The price of gold hitting record highs today, right now at $2,872.10 an ounce. Crude oil futures hovering just below $73 a barrel. The volatility index also pulling back today by 7.5%. Crypto's taking a wild ride on a day in which we saw the first ever official news conference for digital assets hosted by the U.S. government. The crypto czar David Sachs, who will soon be a household name, and the pro-crypto politicians who joined him, committed to prioritizing Bitcoin and digital assets during the Trump administration. According to Bitcoin Magazine, Sachs sharing that the president said in his executive order in the first week that it is the policy of the administration to support the responsible growth and use of digital assets, blockchain technology, and related technologies across all sectors of the economy. He also reminded the audience at the news conference that that executive order, the president established both a working group for digital assets as well as a mandate for the group. He said the objective is to accomplish the task the president assigned, which is to propose a federal regulatory framework governing the issuance and operation of digital assets, including stable coins in the United States. In all this, we saw crypto pull back today. Bitcoin right now down about 500 at 98,197. Ethereum, which has taken a big hit over the past couple days, moving higher right now by about $90 at 2,733, and Doge at the moment at 26 cents. And now the latest news here on 790 KBC. Mottek Money continues here on 790 KABC. Good afternoon. What do the tariffs mean for consumers, especially those looking for a car, a new car, used car, even car parts? Prices of all that could go higher because of the tariffs. That's a big topic of conversation nowadays in the auto business. We brought it up with Lauren Fix, our go-to car expert, when the president first proposed these tariffs last week, but now it has happened. They're on hold for the moment, but it's nervous time on the car lots with Mexico and Canada tariffs now delayed for a month. Nervous time in the car business with concerns that the tariffs imposed on Mexico and Canada will make new cars, used cars, parts, all of that perhaps unaffordable for consumers. Let's bring in Lauren Fix now, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, thank you very much for following this story with us here. What's your assessment of what this is going to mean to Mr. and Mrs. Southern California at the new and used car lots here?
Well, we do know that the electric vehicle mandate is no longer in play. On day one, President Trump removed that, which means you get to choose what you want. Although your governor may push back on that from a federal level, we're going to be watching the federal government coming back to try to reduce the strength of the California Air Resources Board. And so we're going to see a lot of things happening. And something that just broke literally seconds before I got on air with you is a statement that Nissan is likely to reject Honda's offer. And it'll totally destroy the tie-up of them working together, which is what Nissan really needed. And that's going to be a problem. We don't know too much more than we just literally came hot off the presses that the board meeting is going to be this evening, and we'll find out by tomorrow morning what happens. I mean, I'm really concerned for Nissan as a brand. I mean, they do build cars here in the U.S., but remember, they would also be part of that tariff issue because they build product in other countries, including Japan, bringing things in here. So anytime there's a tariff, the natural thought is, especially if you're watching the mainstream media, oh, cars are going to go up $10,000. That's not going to happen no matter what happens with Nissan, what happens with Canada or Mexico. What you're going to see is certain components. And how they do this is they found a loophole in NAFTA, so they rewrote it as USMCA, and they found a loophole in that. And what they're doing is they're bringing parts back and forth across the border to avoid tariffs. So a component will be here made in the U.S. It'll go over the border to Mexico. They'll do something to it. They'll bring it back to go into a larger assembly. That larger assembly will go back across the border to go into final assembly in Mexico or Canada. And so that's how they're missing the loophole. But that's what President Trump wants to close. You can't go back and forth and take jobs away from Americans. So that's one of the main goals, as well as, of course, securing the border from fentanyl, which is not my expertise. I'm sure you have experts for that. But the bigger picture, the bigger thing for us to keep an eye on is I believe that Canada and Mexico are going to do whatever President Trump wants. You know, within 24 hours of that tariff going into play, they immediately said, you know, what do we have to do to not have this happen? They need us more than we need them. But either way, there's always been tariffs in play between the countries, and China's already had a tariff on them. We added an additional 10%. They added 15%, but we don't ship much to China. China ships a lot of product here. It comes across on boat and everything else. So where you might see is some of the car parts might get more expensive, but we're talking 10%, that could be pennies, unless you're talking thousands of dollars. And when they say tariffs on cars, just so you know, they're not going to take window stickers off of cars and replace them. They're not allowed to do that by law. You might see a not nice dealer put a line item in and say tariff fee. If you see that, literally walk away from that dealer group. Anyone that's willing to put that on a window sticker or an additional charge, that's someone you don't want to do business with. You can shop around. There's other dealers in the LA area. They'd be more than thrilled to have your business. But keep in mind that when they say 10 or 25%, that doesn't go on top of the full price of the car. It's the components that they're talking about.
On there live with our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Now, I do see a headline here involving a major recall. Honda, Toyota, and Acura among more than 325,000 vehicles recalled. NHTSA making that announcement in the last day or so. So that's interesting, and we're trying to get more information about the story that you mentioned regarding the Honda Toyota hookup, perhaps being unraveled here. What do we need to know about these vehicles being recalled?
Okay, that was the Nissan-Honda partnership. But anytime you've got a recall, you hear about it on your show, you hear about it anywhere of a recall, or you get a letter in the mail. The first thing you need to do is get your vehicle identification number from your vehicle. And that would be on the dash, just where the windshield meets like the hood area on the driver's side. Write that number down, and I suggest call whatever favorite dealer you want of that brand. If you bought the car used, it doesn't make a difference. If it's a Honda, you contact your Honda dealer, ask for the service department. You don't have to go there. Tell them you have this car with this vehicle identification number known as a VIN. They'll look it up. They'll say your car is under that recall or it's not. And if you have a vehicle that has that problem and they say, well, it's not under the recall, you need to let the dealer know. If they say, well, we can't help you, you report that to NHTSA, which is NHTSA.gov or safercar.gov. When they get enough people complaining about a specific issue, they put in place that recall that protects consumers, because sometimes the dealers don't want to do it because it costs them money, the manufacturers actually. And so this is the way that you as a consumer can fight back a little bit.
Breaking news that you broke for us here. I have some more information here now. According to the Asahi newspaper in Tokyo, Japanese automakers Honda and Nissan may call off merger talks. According to Asahi, reporting this, citing multiple sources, a move that would pitch hard-hit Nissan into greater uncertainty. If this deal had gone through, as you well know, Lauren Fix, it would have been one of the biggest auto companies in the world. It looks like already Honda, of course, is the second largest automaker and Nissan the third largest. They announced last year that they were in talks to merge their businesses. So that is the latest news we're getting from the Reuters news service via the Asahi Shimbun newspaper, reporting that tonight there in Tokyo.
Yeah, this is interesting to watch. I fear for Nissan. They do need the support. They need to start making some changes, but they did not want to become a subsidiary of Honda, which was what was in the talks. If that was the case, remember, there's a lot of culture in here, too. It's not just a business decision, because the Japanese culture is obviously about pride, and maybe there was an issue there. But remember, Toyota already partners with Subaru and Mazda, and you're seeing a lot of those technologies that is being shared. This would have allowed Mitsubishi and Nissan to share technology with Honda. And Honda's a very strong company. They build a lot of products here in the U.S., a lot of jobs. And so this would have been big. This is like a $7.3 trillion valuation that could have been like 5 times larger. So we'll see what happens. I'm hoping that the board makes their decision to work together rather than let a company fail. But again, there's a pride involved, and there's a lot of Japanese culture that's probably something that we wouldn't understand unless you understand the culture. But we'll be watching, because remember, 36% of Nissan is still owned by Renault, which is a French company, and they're trying to get them out of their business. So they've got a lot to unravel maybe before they do any relationship with Honda.
Let me bring this up, too. As is noted by Reuters here, the tie-up talks have coincided with the additional disruption posed by potential tariffs. Getting back to our original conversation, tariffs from President Trump, tariffs against Mexico, they say it would be more painful for Nissan than for Honda or Toyota, according to analysts the Asahi newspaper has been talking to. So that is a big story with, of course, both Honda and Nissan, major operations here in Southern California as far as their dealership network and presence here. And a lot of people work for these companies. A lot of jobs depend on these companies. Lauren, thank you very much for taking the call here on the breaking news as well as the tariff news that we're following very, very closely. I have a feeling we're going to be talking about it again very, very soon. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, live with us here this afternoon on Mottek On Money on 790 KABC. Mottek On Money continues here on 790 KABC. A lot of attention focused on taxpayers these days, how your money going to Uncle Sam is spent, and it looks like there could be some more changes to tax law under the second Trump administration. The start of the tax filing season has happened this week, and what's ahead in the second Trump administration on the tax front? Let's bring in Kimberly Washington now, who is a CPA and tax analyst at Bankrate.com. Kimberly, thank you very much for taking the call here this afternoon.
Thank you so much for having me.
You got a great article, got our attention on Bankrate.com discussing this exact subject. Take it from the top and tell us your assessment here of tax law under the second Trump administration.
Well, I think the first thing that's so important to point out is that under the first administration, when Trump was in office the first time, of course, he implemented the Tax Cut and Job Act of 2021, and this was a major overhaul, and it hadn't been done in decades, right? And so with those changes, it also had some expiration dates, and those expiration dates are this year, 2025. So I just think it's totally ironic, rather, that these things actually expired this year. So that does give President Trump an option or the ability to expand or to extend some of these provisions. With the Tax Cut and Job Act that was changed in 2021, that changed the tax policy, some things that we saw change was, number one, standard deductions. They increased a great deal, and that's an option where you can actually take a certain amount on your tax return. The child tax credit also increased, and then the top tax rate was actually reduced from 39.6% to 37%. That's what it comes in play when it comes to individuals. And on the business front, we saw that corporations saw a lower tax rate of 21%, as it was high as 35%. So those are some of the changes that took place back then. But again, it puts them in a unique opportunity to now extend some of these different provisions of the Tax Cut and Job Act, which I think would be policy number one for him this year.
Right. You mentioned that standard deduction was doubled, and I've been reading articles about that, how it's impacted charitable giving, whereas before people got that deduction for making charitable donations, and now it looks like, according to some recent write-ups, only a very small percentage of people are making charitable deductions now that are itemized, right?
Right, that's correct. So less people are actually itemizing. That was an article that stated that about 90% of taxpayers are using the standard deduction now after these changes were made. And you're right, when it comes to charitable donations, less and less people, of course, are able to take that deduction on a tax return. And while you still can take certain deductions as itemized deductions, it's important that your users do know there are some deductions you still can take with standard deductions. Number one would be the educator expense. If you are a teacher or you work in the school system, some professions, you can take a small amount. It's about $300 of education expenses or amounts that you spend. And also when it comes to like IRA contributions and also health savings accounts. So there's some other things you can do, but to your point, some things you can no longer do or you're not able to take advantage when it comes to like charitable donations or other itemized deductions.
Right. Well, we have a very generous audience that listens to this program, so hopefully they will continue to donate to the charities that need it most, especially given this fire and homeless situation here at the moment. Now, you've also went ahead and taken a look at what we can expect down the line here, perhaps additional tax benefits for small businesses and maybe some changes on the crypto front and a lot of things happening these days. Tell us what's ahead.
Right. And so one thing I just want to just step back and say when you said just the thought about the charitable donations, I just want to tell your audience, if someone's listening, you're listening right now, you're thinking, hey, I can no longer take advantage. There's some things you can do, and I just want to point that out. You can bundle your charitable donations. So let me give you a quick example. You might want to give at the beginning of the year in January and then at the end of the year too. And so that way you may be able to beat the standard deduction. So you want to think outside the box. There are some other things that you can do, but that's something to keep in mind. Now, when it comes to the business front, when you think about business and some things you want to keep in mind going into this year, one of the things under Trump's administration, the change that he made under the Tax Cut and Job Act was the qualified business income. And this would allow small business owners, if they're a certain type of entity, to take a deduction of 20%. So we know that is set to expire this year. So that's something to keep your eye out for. Other things you want to look at when it comes to business taxes this year, kind of lower your tax liability. You want to think about certain deductions such as, of course, number one, taking healthcare premium deductions for self-employed that can reduce your tax liability. And two, retirement contributions, setting up something for your small business. But those are some things that you may want to look at.
Kimberly, thank you very much for taking the call on all this. And again, she has a great article on bankrate.com regarding taxes under the new Trump administration. Kimberly Washington with Bankrate, the tax analyst there, as well as CPA. Kimberly, thank you very much for joining us live here this afternoon.
Thank you so much. I appreciate it.
Thank you very much. And an update on Wall Street, recapping the day. We saw the Dow close up 134 points here at the bell, S&P 500 at 43, and the NASDAQ regaining 262. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.